Welcome to the Steady Trade podcast. It's me, Stephen Johnson, and the older dude with a StocksToTrade t-shirt, Tim Bowen. We've literally rattled through 2 seasons, which is quite monumental when you think about it. And that takes us up to episode 21. How do you feel about episode 21, Tim Bowen, Sir Captain Drill Sergeant?
I'm looking forward to this. It's pretty, we've first of all, I appreciate all of the comments and the iTunes reviews. Really appreciate all of the input that everybody has given. I mean, we've had literally close to 2,000 comments, and the majority of them are very constructive and very positive. So really makes it fun to show up for episode 21. Really makes me look forward to doing these every week.
And the episode of 21, which is quite an interesting one, it's basically Stephen Johnson blew up. Stephen Johnson blew up his account, and I can smile about it. I can smile about it now, but I was not smiling when it first happened. Just to give a quick bit of context, I've got a slightly bigger account with Interactive Brokers, but I'm not over PDT yet. And I started a little account with Trade Zero, had $1,000 in it, and I just blew that up like a bomb. And
so it was we had actually, it's funny, we had a different episode planned, and I'm not trying to beat up on you, but I actually requested that we change the schedule to insert this in. The simple fact is, and again, one of the reasons I always love working with you, Stephen, is your attitude. But blowing up is quite frequently part of day trading. It's not talked about a lot, ironically. You won't hear people mention that it happens, but I know a lot of some of the most successful day traders, and many of them have blown up accounts even several times. Not saying I recommend it. Ultimately, if you've listened to any of especially season 1, we pounded the desk over and over again about sticking to your plan, taking small losses, but sometimes, you've got to burn your hand on the stove and learn from that lesson. And by learning from it, you never want to get back there. So I'll let Stephen tell the story. But, if you're not familiar, when we say, just a little bit of explanation, when we say blowing up an account, it basically means that he took his $1,000 account down to about $50. So when we say blowing up an account, it's not like the literally exploded. It's just you took a huge loss that wiped out all of your capital.
No, I was pretty much dead. That account was dead, and it's funny because I just get the image in my mind of, when somebody dies and they draw the line around the body on the street. If someone died, I just needed to walk in and lie in that, and just lie in that. My grave was already marked out. Like, my grave was marked out, and I was dead, and I was just lying in that drone.
Now, what's before you tell the story, what's interesting, I remember at some point you and I had a conversation, and didn't you say, like, I'm going to do this and I'll probably blow up this account? But was it like a self-fulfilling prophecy or not?
I just wanted to do it. I just wanted to blow up an account. I was like, I've never blown up an account before. I'm just going to do it.
Am I remembering that right? Did we have a conversation like that or not?
Yeah. No,
I
think we did. I think we said something like, I'm going to put $1,000 in. It's going to be experimental, and whatever. If I blow it up, I blow it up. I think that was more or less what I was saying.
So that's again, we've often joked in these episodes about, I think we had a whole episode where we joked about the secret and the power of positive thinking. I'm almost wondering if you employed the opposite of the secret, and by talking about blowing an account up, you ultimately made it blow up.
I'd rather blow it up now than blow up like a 50 grand account or something like that. But I mean, if you ask us, how does it feel? And then we'll get into the specifics. How does it feel on that night? I remember thinking, it feels like you're riding on a bike on a hill really fast and you fall off, but you fall off into broken glass on the edge of a cliff. Right? On the same day that your pregnant wife has just said that she's leaving you for your best friend.
That's a rough day. I'll give you that. So I like how descriptive you were with the broken glass and flying off the cliff. We might even have to we might have to like go out to like some like Elance or something and get somebody to get an animation done. I'd like to see that. So
honestly, it's like you're crawling over broken glass to go to your best friend's wedding, and he's just married your wife who you still love. Like that's how it feels.
So, and actually, but before you get into the details, I did want to make the point that again, I your attitude is right, and again, you made a very good point that I don't want to skip over. Many people will say exactly what you said. I mean, it's much better to make that mistake, wipe out $1,000 account, and know that you never want to wipe out your bike and hit broken glass and fly off the cliff, than I've seen it a lot through the years. There'd be a lot of guys that would have really early success and go from like 5,000 to 100,000, and they thought they could do no wrong. And these are the guys that would just disappear. They would be like, I know it all, blah, blah, blah. And all of a sudden, boom, they disappear. And you know what happened. So,
but honestly, I mean, the thing is, the good, like when you lose money and you're losing month on month, it's the most demoralizing, hardest phase of trading ever, period. But when you start making money, if you give a little bit of it back, it's not the total end of the world, because you know how to make money in the stock market. So you'll get it back. Or at least you should be able to get it back. So it was not anywhere near as bad, really, as when you are losing month on month and not seeing any results. I've since made the money back. I think I've just since made the money back that I've lost.
Which wasn't bad. Again, I mean, what was that? A 1 week turnaround?
Yeah. I lost $1,000, and within a week I had it back. Yeah.
Nice. Well, so let's
lost it again.
well, we keep teasing it. So let's we talk about trade plans every day. I'll let you lay it out. What was your idea? What was the ticker? What happened? Break it down, and then I'll pick on you about how stupid you are after you're done. So
basically, I was going along in S-Racks, and I was dip buying S-Racks, and it went down a little bit, and I just thought, do you know what it is? I'll just cut this because it's not gonna come back. Cut the loss. So I cut the loss, and then the next thing, it squeezed like $1 a share, and I was just like,
So again, you were long.
So I was long on S-Rack. So I was pissed about that.
Okay, all right. Okay, so you're in a bad mindset at this point.
Yeah,
okay.
Yeah, because I just cut a loss, and then it ramped $1 a share, and I was right. And then I did also previously have a plan on LMFA, and I know that LMFA it's a low float stock. It's about 3 mil. So I always know, don't short low floats, because when they spike, they can really go against you. But also, don't go too big long in them either, because if they drop fast. I didn't think the psychology that way. So I was annoyed. I went in long with LMFA. I was in about $4, and the plan was if it could break the 430s, that was its long-term resistance. And I thought if it breaks that and settles on it, it's gonna push and it's gonna run again. But I went in early for some reason on the 4s, because it was holding the 4s. And then as it started to ramp, I built in, chasing it. But I was actually building in a long-term resistance. And my original plan was let it break the long-term resistance, come back down, test it, hold it, and then go ahead.
So in essence, and again, and I'm not, I'll actually be nice. So again, you had this idea, but you kind of changed it on the fly because you were anticipating the break. You wanted to size in before the break, even though you knew that it's going to struggle at that resistance level.
And this resistance level is a really big resistance level. So like if you think of the Game of Thrones, the big wall on Game of Thrones.
Yep.
Like if you run as fast as you can with as much money as you have into the wall of the Game of Thrones, you're going to hit your head off it and fall backwards. That's what that resistance wall was like. But my plan was to if you got through the wall and someone give you a key, then to run as fast as you could, because you've got the free key through the wall. Sure. But I didn't. That's the most mental analogy ever. Doesn't make sense.
No, I think it's good. I mean, your point is again, you were running before you were through the wall, and that by adding more size in anticipation of the break, is where you made the mistake. You should have been adding size after you were through the wall.
After it broke and after it had proven. But
Yes.
so I just literally went long on the perfect short because all of the shorts would have been going short, building into the 430 resistance if it breaks.
And help me out. What is LMFE? Is that like a sketchy lithium?
LMFA. I mean, I thought it was like laugh my effing ass off or something. LMFA.
Is it like the I'm sexy and I know it band or what? Is it those guys? That's what I was doing while I was losing. I kept on saying 300 down, 400 down, 500 down. I was going I was just dancing as I kept on blowing up. But I don't even know. I don't know the fundamentals of the name. I can't remember. Okay.
I think it's a shitty, sketchy company. It's got a history of not holding spikes. There was no catalyst. It was a
it's LMFA. There we go again with your accent. I couldn't tell. If you would just speak American, I would know what ticker. So okay, all right.
For that, I'm going to be American for the rest of the episode. That's it. I'm American for the rest of the episode now.
And actually, I will ask. This is actually a good visual. I'll ask to have this chart added to the podcast because you look at this chart and that 450 level is concrete for sure. Yeah,
gnarly man. That it's such a gnarly chart. So gnarly that chart. No, so there's a very big resistance level in the 430.
Yeah, going back like literally years.
Yeah, forever. Like since the beginning of time. Like I literally that it's such a bad trade because I was buying into a resistance level. I mean, but never mind. I made the mistake. And what I didn't do is I didn't cut the loss. Like I was up a few hundred at one point, and then I was down 100, then down 200, then down 300. And I honestly just thought I was sick of me broke. I was with Trade Zero at the time, and I was sick of them. And I just thought, if I blow up this account, it just means I don't have to deal with them anymore as well,
right.
Which is a stupid way of thinking, but I was just like, good, because I don't like them anyway. And that's about it. I mean, is there anything?
So at what price did you sell then?
Sold in about the 340s, the 350s.
Okay. And again, and again, not to beat you up, but yeah, this is, just looking at this chart, it is. I often joke in StocksToTrade Pro about charts that look like a disaster, and this chart is a disaster. Okay, so Stephen, I've if you're listening to the audio of the podcast, you could always jump over to the YouTube version. But if you're just listening to the audio on your phone at home, you could bring up the chart of LMFA. So Larry, Mary, Frank, Alpha. Yeah, I could do that too. So
Alpha, Larry, M for Mother, F for Fox, A for Alpha.
and we'll and you can see and now if you're on YouTube, you'll see my screen. So the area we were talking about is where I'm hovering right here, where LMFA basically was at 420 to 450 for basically all of 2017. Then we talk about in technical analysis, we often, and you've probably heard me say this, we talk about history doesn't repeat, but it rhymes. And LMFA is like a classic example of that. You see how there's just no movement all year, stuck in a range. It collapses in September, bounces, fails, bounces in October, fails, bounces again in November, fails. And then we come to the day that Stephen decides to go long on the sixth time that this stock basically bounces exactly into resistance at 420 or 450.
Yeah, and it's funny because the company's called LM Funding America. They certainly took my funds away from me. But, I knew there was resistance in the 430. So like I say, I was looking for it to break this 430 level, and then obviously resistance becomes support. If it can hold that level, then I was hoping it would push again. But it's a bad long-term chart. I was buying it before the resistance level, and the biggest warning sign for me is the history of it had 2 green days. It managed to pull together 2 green days in the past year. We can see this in October, but other than that, it's never had 2 consecutive green days. So obviously no one's going to want to hold this the next day because everyone knows it's just going to feel like every time. And the big wicks on the candle as well.
Yeah. These when you and again we'll talk. Obviously we've got hundreds or thousands of episodes ahead of us of the Steady Trade podcast, and we'll talk a little more about candles, and specifically candlestick charts. But again, what jumps out at me, as Stephen mentioned, these days that it did run, when you see a big wick on the candle, and then ultimately the stock closes much lower, that tells you right away that this stock spiked hard and then ultimately closed the day way off of its highs. And then you see a red day the next day, which tells you, and again, nothing is guaranteed, but shows you that all these spikes tend to get sold into. So what does that mean? That means, and again, if you're looking at the screen, I've got the 5-year chart up now, and this stock has just been trending down forever. And when we talk about a bag holder chart, it is exactly this. Because think about, if say you own this stock in the 8s back here in 2016, if you get a spike of $1 a share or something after getting ground to death for 2 years, what are you going to do? You're going to sell, because you're like, thank goodness I got $1 a share pop. And again, depending on the news, depending on the catalyst, doesn't mean the stock can't run. But this chart is, again, it's interesting that this is the stock you decide to scale in long, because this is like the chart you love to short, right?
Yeah, it's insane. This for me would be a textbook short. When a stock like this pops up like this and it's anywhere near the 430s, I'd be shorting into the 430s. So why?
So explain that. What? Let's try and, I don't know if we want to go into the deepest, darkest depths of Stephen's mind. It's a scary place. But
no, I feel very comfortable.
Explain what made you, not only again, you're very short bias. So what made you decide to go long this stock, and then doubly so, what made you decide to size into it?
I know it's quite therapeutic. It's like I lost the trade, picked up the phone and just called Traders Anonymous. It was like, can I check it? Can you check me in? I'm a losing trader. So basically, with LMFA, I literally just watched the account blow up, and then my first instinct, it was funny. I was just saying, this feels a little bit therapeutic. It's almost like I just picked up the phone and I just called Traders Anonymous and checked myself in as a failing trader. But yeah, I don't know. I blew up and I just couldn't believe it. And then I went to bed, I went to sleep, and I just thought.
Well, wait. You skipped over my question.
Sorry.
I want to know, and our listeners want to know, again, as a 90% short bias trader, why this stock, with that chart, which is your bread and butter short setup, why this one? Again, it's not like SRAX, again, SRAX. It was a Bitcoin related stock. It was crazy. I can at least, I seldom can understand anything that you do, but I can at least understand why you would choose SRAX, because of Bitcoin mania. But why LMFA? I'm baffled.
Yeah. I have no idea. I just I'd lost money. I'd lost a little bit on SRAX. I was pretty tired. It was like 1 o'clock in the morning, midnight out here in Dubai, and I just saw LMFA making little higher lows, and I just thought, you know what it is? I don't want to miss this. I've just messed up SRAX, and it was the psychology of just missing out on one trade, so I was jumping into another one. And so I just impulsively jumped into it without looking at the 2-month chart, the 6-month chart, without looking at the catalyst, without looking at the longer term resistance.
That's good. That's useful, because I tell you, as I talk to aspiring traders, that is something I tell them over and over and over again, is you have to go through that process, and it only takes a minute or two to do those steps that you just said you didn't take. I mean, it's not like it's an hour. It's a
2-minute thing.
Maybe not even 2 minutes,
It's a 30-second thing. But the crazy thing is, I didn't cut the loss on LMFA, because I did cut the loss on SRAX and it ran without it, and I was pissed. So obviously I was thinking, I'm not cutting this one because I just cut the other one and it messed us up. So a couple of bad things happened in order, and then it just, obviously the next thing I know, I'm a grand down.
Now, and again, that's another a lesson. I mean, again, I know that I'm the crusty old, man on the mountain with I need a longer beard, I think. But, I've often said, don't let one trade influence another trade. Again,
Easier said than done.
Agreed. Hey, and I do it too. But it's interesting how, especially if you're in multiple positions, how you'll like the ultimate mistake that, or not the ultimate, but a very common and very frustrating mistake that even I make. You get in multiple positions, you'll sell the winner and you'll keep the loser because you're like, oh, okay, I'll offset the loser with the gains on the winner. And I mean, what's the number one, maybe not number one, but number two rule of trading is cut your losers and let your winners run.
Yeah, Jesse Livermore said it in the book, eh? That was
add
to your winners. Add to your winners.
And again, I know it's hard. I'm not beating you up, but yeah, it's like you took that psychology from the other trade and you in essence amplified it by applying it to the next one.
Yeah, but I mean, ultimately, I really don't see it as a bad thing. I mean, I've made the money back in the market since, but so I always see it as an evolution. So for my evolution, you lose all the time. Then you start making money, which is where I'm at now. Then you get too cocky and you mess up, and then it takes you back a step, and then you take another step forward. It's always kind of one step back, two steps forward. That's the way trading is. So I was just like, all right, this was my time to blow up the account. Like that's okay. It's not the end of the world. But I don't know if the most important thing that I've learned though, and a lot of people said this to us, is like, and I wrote this on Twitter the other day. Everyone who's new wants to trade everything all of the time, and they want to try all of these different setups all of the time. And the way I got profitable 3 months in a row is that I just traded one setup at one time of day, and I tracked the data on it, and I went over it, and I just did it over and over and over and over, and I still make mistakes. I nearly blew up the other day on that because I shorted that stock too early. APEN. So I'm still not even perfect at that setup. I need to master it more, and that's just one setup.
Yeah, and it's such an evolution, and that's again what we're trying to help accomplish with Steady Trade is to understand that if you're new or even if you're intermediate, work on one setup. Now, what is your setup? It might take you 10 months, like Steven, to find out that you're good at shorting stocks that are hitting resistance. I mean, it took him.
That's it.
Yeah,
that's it.
And it's a common misconception that I blame Twitter. I blame chat rooms. Guys are buying breakouts. They're shorting breakdowns. They're buying 52-week highs. They're shorting 52-week. You see these guys throwing out all these different calls, and you think, oh, that's how you make money.
Exactly.
I know some of the most successful day traders, and most days they just do the same shit every day, and you just wash, rinse, repeat,
But it's just insane because like what happened with me having a couple like back-to-back green months, it's like, oh yes, I've got trading, I've got it. And then I realized when I blew up that account, I was like, Steven, you only know one pattern and you don't even know that pattern very well. You know one pattern. You're good at one pattern. That's it. And you can make money. Great for you. But then I was like, shit, I now need to learn another pattern. So now I'm looking at like kind of faders, afternoon fades, lot safer. Afternoon fades are a lot safer than short and spikes in the morning. So now I'm looking at afternoon fades. Now I'm going to track the data. This is the second pattern, but you've got to find one pattern and master it and then get to the next pattern.
Yeah, I talk about, again, my evolution. A lot of you probably know my bio, but I mean, I had a business. I was a part-time trader for, 4 or 5 years. And, my process, a lot of those years was, I mean, I would watch the market open. I would know what the big gainers were. I would have an idea. I would break them down. I would do quick fundamental and technical analysis. And then I would go about my work, go about my business, customers, employees, and I would come back late day and just look for the ones that hit resistance and were fading into the close. And that was 90% of my trades for about 4 years. And it's great for part-time traders. It's great for new traders because you get that junky stock that rips early, fades late, you short it, you've got a stop loss. Maybe it's back at the high of the day. Maybe it's back at VWAP. Maybe it's back at resistance. And most of the time, if you get, not all the time, you got to ultimately execute. But if they're fading into the close and they're a junky stock, lots of times they gap down the next day. Yeah. And all of a sudden you just made a nice trade and you didn't even use a day trade if you're under the PDT.
Yeah, I mean, and that's the thing. Like, I spent so long trying to be some sort of trading know-it-all superhero, and then the minute, and so many people say, just be basic. Like Roland as well, I'll just do basic stuff. You just have to make it really basic. A stock gaps up, the news isn't very strong. It's got a bad long-term chart. It's near resistance. You short when people are buying because you're doing the opposite, and 95% of traders lose. So you do the opposite of them all. And that's it. Like, there is nothing more. And it's
so it's interesting that setup you just explained is like exactly LMFA, right?
yeah. I just had a mad moment.
So your biggest loss ever, you blew up an account, and it's like it's your bread and butter short sell setup. So
it's crazy, but you've got to be careful because a moment of frustration can cost you a lot of money.
Mm-hmm.
It's been and for me, I've been trying to size up a bit more. And the problem with sizing up, and this is how I nearly took the $1,000 loss on APEN the other day. The problem with sizing up is you start seeing it red, like when it's red $40, red $50, you're like, fine, I'll take the loss. It's only $50. Hopefully I'll make a few hundred on the next one. But when you start sizing up and you read $200, you read $300, you're like, I don't want to take this $300 loss. I don't want to take it. And then the next thing you know, it's 1,000. So this I need to work on. I don't know how.
So let's unpack APEN. Let's break that one down because that was an interesting trade. We talk about risk to reward. We talk about cutting losses early.
I know where you're going. I know where you're going with this.
Ideally, we want to try and risk 3-to-1 or better. So in an ideal world, you lose 100 to try and make 300. So why don't you break down APEN for me and how well your risk to reward was on that trade?
I know this is going to be your favorite question because you're setting us up to look stupid. But,
I wouldn't do that.
But again, the thing with APEN was, I'm going to try and just...
Which APEN ultimately was an incredible short,
APEN was an incredible short. The problem that I had with APEN is I knew it was an incredible short and I'd not seen anything like this for a while. So I got over impulsive and I went too big too early on it. So with APEN, I was shorting big pre-market. And that's the crazy thing as well. My strategy that I do well on is for these stocks that gap up, which have bad long-term charts, short into the morning spike. But I got over impulsive, shorted pre-market, ended up down 1,000 when it did spike. And I just got my position upside down and the wrong way around.
Yeah, which again, when you talk about techniques, especially as a new or intermediate trader, I mean, if we were in the same room and you were shorting a stock with size in pre-market, I would smash your fingers with a hammer. It's one thing to short morning spikes, but in pre-market, it's different. You get wild spikes, and typically, if a stock spikes aggressively in the morning, it will continue to spike after the open. So, very, not saying you can't make money shorting in pre-market, but it is very dangerous.
Nah, and that's the thing though. Like, I just made money for a few months in a row, and then I started thinking, you know what it is? I know this game. And then the next thing I knew, you find yourself down a couple of thousand a couple of times, or down 1,000 a couple of times, and you just think, shit. I don't know. That's the only way I can explain it. Like, I got put back in check. Do you know what I mean?
Yeah. Well, there's
put back in check.
There's the classic quote, and I can't remember who said it. Maybe it was Jesse Livermore. I don't know. But, the quote is, in trading, stay humble or the market will humble you. And again, what I like about what you're, and again, I think this is good for any listeners. I think it's good for you. I mean, ultimately, you said it. You got a little cocky, and Mr. Market said, slow down, Steven.
Yeah, which is fine. So the thing is, you've got to think, well, what do I take out of this, which is positive? I feel like this is therapy. I like it. How can I be better, Stephen? Stephen, how do you think you can be better? I'm asking you. You're the therapist. but what can we take out of this? Can we set some rules? Like, can we set some? So it's like Stephen blew up. Like five ways of not blowing up again, or something like that, or 5 things to avoid it. So number 1. I put myself back under PDT because I thought, you know what it is? You only need to make 3 trades a week.
Yep.
I get up. It is horrible waiting for that day to come when you can trade when you see a good setup. But I was thinking you only need 3 trades a week. And when you've took the losses, it's been in the afternoon. So just don't trade the afternoon. It's 1 o'clock in the morning, midnight. I'm tired. When you're tired, you make mistakes. So
that's a very good point because, again, I think most of our listeners know, but, Stephen is in Dubai. So obviously trading, at the market close is not an ideal time for a guy. I mean, again, I think the listeners know, but Stephen has a day job. He works all day, and then he, if he's trading the market open, he's trading it at 1 a.m. his time. No,
so it's like I'll basically work 9 till 5 and then trade 6 till 1. And by 12 o'clock, like that's working like 17, 15, 16 hours a day. So you're going to do stupid shit. So yeah, it's just like, stuff it. I'm not going to trade the afternoon. And I'll go back under PDT. And I miss it. It's sad, but you've got to change the conditions that caused that to happen. That's what I thought. I was like, it's fine to blow, but it's okay. It's not like I've lost the money, but how do I change the conditions and the environment? I was even going to not even trade in my room for a while. I was going to go to the coffee shop and trade, like literally change the environment. But yeah, just change what went wrong. Like, and this is what a lot of traders do as well. They keep on losing on the same setups. They're like, oh, ascending triangles. I'm going to buy ascending triangles. Like, stop. Like, fool me once, joke's on you. Fool me twice, joke's on me. Like, don't repeat the same setups that don't work. There's a reason they're not working. If it doesn't work 3 times, don't do it again.
Yeah, I think, Twitter's great. Chat rooms are great, but, I think it's difficult. And that's where guys, they'll see people saying, oh, I did this. And then you're like, well, I need to do that. But again, if it's not working for you, everybody's different. Everybody's better at different things. Focus on what works for you and just keep doing it, and again, you put together this, 2 green month doing the same in that
same
2
single thing.
So for 2, okay. So, well, yeah. So basically into the 3rd month, and 99% of your good trades were doing the exact same thing.
It's ridiculous. It's literally ridiculous. It's ridiculous. I'm not even joking. It's ridiculous. Like, I don't know how many times I can say ridiculous, but it's ridiculous.
But like,
it's ridiculous.
Ultimately, the takeaway is, ultimately the takeaway is you got to make these mistakes. I mean, it's like you can't. Again, it's like learning anything or a sport, or it's not like you got to miss the shots. You got to make the wrong plays to figure out, oh, okay, that doesn't work, and you figured out something that didn't work for you, and that's part of your evolution as a trader.
Yeah. So I mean, basically 3 things: don't trade when you're tired at night, don't trade the afternoons, go back under PDT, and don't show pre-market, and that's it. And then you just eliminate the mistake, do what works, cut out what doesn't work. But honestly, when I found that setup and I started making consistent money with it, I was just like, I don't know how this is legal. Like, how is this legal? How is this legal that you can do this? But I mean, what's your favorite setup? You must have a go-to favorite setup.
Well, again, it evolves. Right now, my favorite is, again, I love these low float stocks, these low float runners, and the favorite is that low float stock, which again is less than 10 million float, that has some sort of news or is buzzworthy. Maybe it's a Bitcoin related stock or whatever, but it's a stock that spikes early, consolidates all day, and then perks into the close, post 2 p.m. And that is, again, I love that setup because you don't have to worry about getting borrows. You don't have to worry about all this. You buy the break at the high of the day and you sell at the consolidation areas. So many, many, many of these low float runners ultimately fail. But if you buy that perk off of consolidation, You sell if it fails. If it fails to break out, you sell. You lose 10 cents a share, 20 cents a share. If you got 1,000 shares, it's a couple $100. You got 500 shares, it's $100. But when these low floaters break to that high of the day, lots of times you're looking at $1, multiple dollars of upside. So
yeah, and you've got that day two as well, and you've got the day two. What if it runs day two? You've at least got the gap up. But when you do that, are you waiting for kind of the volume to come in? Are you waiting for the start of the move breaking off consolidation, or will you just take the chance and buy on the consolidation?
Well, more on time of day, because if it a lot of these moves, if they happen at noon, typically I avoid them. But if it's post 2 p.m. and again, you've got that recipe, it's a low float stock. It has some sort of news. Now it can be dubious news, and I want something that is a clean chart. So when I say clean chart, it's the exact opposite of the charts you want to short. I want stuff with no overhead resistance when it's just blue sky above. Now, and again, not to beat on you, but like LMFA, you look at that. I mean, there's resistance everywhere. Yeah. I really don't care if that's perking to the high of day because I'm like, man, this thing, the odds of it really running are pretty low because the messy long-term downtrending chart, the bag holder chart, we call it, where if it's, if this is a stock that's been at, $2 for 2 years, it's at 3 yesterday. Now it's at 4 today. It's all blue sky above. Doesn't guarantee it will run, but there's not all those bag holders selling into spikes.
Yeah, I mean, it all just comes down to patience for me. Having patience to have, like, first of all, figuring out one setup, two setups, and then just having patience and playing them when they come and doing it over and over and over. Like, that's it. And when the markets get a bit quiet, when you start looking for other stuff, that's when you start losing money.
And again, that's what I love is that you recognize that it takes time. It's just one of those things where now, hopefully, next time you'll be like, man, and again, remember, everybody makes mistakes. I make the same stupid mistakes every day. Guys that have been doing it for 20 years make the same mistakes. But ultimately, when you have a mistake, you blow up an account, you now know, wait, I'm doing LMFA all over again. I'm not going to do it. And now that's the one good thing about these tickers is they stick in your brain and you're like, oh, I'm doing it again. I'm not going to take 1,000 loss. I'm going to take that 150 loss, whatever that number is.
Yeah, no, and I mean, it's such an amazing thing. Like, I mean, and I know sometimes when I'm on Twitter, I'm like, I read the tweets the next day and I'm like, God, why did I write that? I'm like, why did I write that?
Well, no offense, Stephen, but I would that probably has something to do with the alcohol, but that's just a guess. It's just a guess.
I'm like, this trading is the worst. I'm having such a bad night, and I'm like, oh. Wake up the next day and I'm like, no, stop writing stupid shit on Twitter. And I'm just like thinking, has Tim Bones seen this? Has Tim Sykes seen this? Just can I delete it? Can I delete it inside? But
so what I'd like you to close on is let's end on a happy ending. So break down the last week where basically, and this is actually going to be a reason to always cut losses early. But explain basically you've made that $1,000 back in a week. So talk about give us a happy ending. So
yeah, well, I mean, I think what is dangerous? The dangerous thing is once you lose the money, you try and make it back. Fortunately for me, this time I did make it back. I made it back quite quickly. I had another trade. I can't remember the ticker. I had my biggest loss, my biggest win in the same week.
Okay.
And I can't remember the ticker off the top of my head, but I made about as of about 300 on the week, and then I made another 600, which basically made it all back.
Nice.
And from what I can remember, probably it was just bread and butter. It was just the same bread and butter, shorten into resistance and taking it as no. It was a stock that gapped up. I shorted into the spike, covered into the dip, covered into the morning washout, and I made like $630. So I made the money back by sticking to me bread and butter setup. I lost the money in the first place by not sticking to me bread and butter setup. So it's just learn once. It's hard for people because it's like, people are like, well, how do I find my setup? How do I find my setup? And it's like, it's hard. You've just got to look at the charts over and over and over until you see one thing that you like, think, this keeps on happening, and then watch it over and over. And just like, for me, I only would watch the first hour of the morning, and I'd get really good at tracking the first hour of the morning on a specific setup. And that just worked for me.
Well, and again, it's part of, your spreadsheets, it's your journal, it's using all these things. If you're, and it doesn't need to be super complex. I mean, just name your setups. If you're, if you look at your spreadsheet and every time you shorted a morning spiker, I mean, that's 3 words. You're like, okay, that one's red, that one's red, that one's red. Okay.
Exactly. It's insane.
Let's quit shorting morning spikers and maybe we start buying them. And then you're like, and again, just random examples, but then you're like, hey, maybe this is my setup. And it takes experience. It takes time. So,
but like, and people get worried about Excels as well. Like, oh my God, I can't do an Excel. But all you have to do is put in the number that it opens at, put in the number that was the high of the day, work out what the percentage increase was, do it for 30 stocks, and then work out the average and say, wow, on average, these stocks that gap up spike on average 7%. So what's 7% of this stock that I'm looking at today? I'm going to short it at 7% and I'll average up to 10, 12%. That is literally it.
Yeah. And again, I know like Stephen Ducks gets like crazy, like Einstein level math in his spreadsheets.
I swear he's got people helping him because it's so boring to do it. It's so boring doing it.
But I mean, you don't, and I get asked about it a lot. And I'm like, hey, all you need is like a column with the ticker, entry, exit, name the setup, and then gain, loss, and then you like color code it. Yeah. You could do just a quick conditional color coding on the cell and just look. I mean, you don't need to get rocket science, and just see, okay, I tried buying 10 breakouts and I lost on 9 of them. I'm done buying breakouts right now.
Exactly.
So.
But most people just do trade blindly, don't document what they're doing right and wrong, and then wonder why they're not getting any better.
Yeah. I mean, there's all those management quotes where, if it gets measured, you can improve it. But if you're not tracking it, good luck.
Yeah. But so the lesson is don't short pre-market, and I'm never doing it again. I'm never doing it again. And if I do, it's tiny size.
Hi, this is Aaron, aka Double A Ron from New York City, and I like to go outside and find a stray dog, preferably an aggressive breed like a pit bull or a Rottweiler. Then I get real close, stare it down eye to eye until it starts to chase me. Then I run. That's right, I run while listening to Steven and Tim on the Steady Trade podcast. You can register to win real actual prizes at their website, SteadyTrade.com. And if you really like what you hear, give the podcast a 5-star rating and write a glowing review on iTunes. I did, and this is how we say goodbye in New York City.